The thing with Italy is that it's more of a political situation, and Italy have been going through this process time and time again for decades. Investor sentiment right now really is not focused on fundamentals. It's focused more on short-term vaccine news and the post-COVID reflation trade. And in our view, most of the cyclical reflation trade is already priced into the market. So it's hard to see Italy do well in this environment. It's hard to see broad-based Europe do well in this environment. And if we're honest, markets look very overbought at the moment. Forward PEs just in the US are at 28, but in Europe they're at 25, and in the UK they're at 26 as well. I guess the other thing to focus on, Matt, is what's going on with GDP growth. It looks like in Europe we're going to be down about -7% for the year, and maybe a U-shaped recovery rather than a V-shaped recovery, where we get GDP growth back up to about 4.5% this year and next year. And that's kind of how the mindset for investors is looking at the moment. Obviously, there's a massive risk around the distribution issues around COVID vaccine, and longer term, the impact of high unemployment cannot be underestimated. It will have quite a bearing on investor sentiment and consumer spending, and investors need to be very cognizant of that. I guess we've also got Q4 earnings about to kick off, haven't we? And that starts in Europe next week. It's hard to see very good numbers in that space. We expect Europe to be lagging the US. We're expecting Q4 earning numbers to be about -26% for Q4, and revenue numbers to be about -9%. But next year, Q1, Q2, Q3, Q4, we see the earnings numbers improving quite meaningfully. And that, again, is something that investors will be focused on. And I guess the last thing, Matt, that's very topical around Italy, Germany, and the rest of Europe is what's going to happen with Brexit and the whole talk and the whole discussion. All the no-deal uncertainty is now being removed off the table. That's a big positive. The FIN 3 trade is probably a bit too skinny for our liking. There's lots of meat that needs to be added to the bone in form of financial services accord. That's likely to take some time. Look how long it took us to negotiate a Brexit deal. Imagine what it's going to be like for us to negotiate a deal around financial services. So a lot of uncertainty there as well. We're underweight Europe. I think the market is pretty much underweight Europe. We've been underweight the UK for some time, but we've become more neutral the UK. All that Brexit uncertainty is now being removed. Corporations are putting a hold on spend and are now likely to start spending again. And we see that as reasonably positive. Now, remember, the UK returned -14% last year versus the world, which did +14% last year. So there's a massive catch-up trade to be played as well, if you are brave and you can weather the storm short to medium term.